Okay. Hello, everyone. Welcome to Business First Wednesday for the new year. I'm Melissa from the Business Insight Center at the Central Library of Rochester in Monroe County. Thank you so much for joining us today. Please remember to mute your microphones and enter any questions into the chat. For this presentation, we will be answering questions as the presentation goes. So as you think of questions, feel free to put them into the chat and we'll get to them before the topic changes. This presentation is being recorded and will be uploaded to YouTube. And if you have registered for the event, you will receive an email with the presentation slides. Just a reminder, all services of the Business Insight Center and Carlson Center for intellectual property are free and available by appointment only. And I will let Tim introduce our presenters.
Okay, thank you, Melissa. Welcome, everybody. My name is Tim Bach. I work with the Small Business Development Center and appreciate you joining us. Happy New Year. And so the SBDC, Small Business Development Center, there's about 22 centers in New York State, about half down by New York City, the other half spread throughout the state. SBDCs are in all 50 states. Our office, we're affiliated with SUNY Brockport, but we're actually located at the downtown MCC campus. We help new and existing businesses with business plans, loan assistance, financial, marketing, management, and technical assistance. Probably the best way for you to make a no-fee appointment with us is at our website, www.nysbdc.org. That's www.nysbdc.org. And so the subject today, start the year off right for small businesses. So before introducing the speakers, I just would like to share a couple of thoughts just for fun here. It's kind of tricky because I'm looking at my computer screen. I see a couple of you are sharing your faces, but for the most part, I feel like I'm speaking to my computer monitor, but that's okay. So I just want to share a couple quick thoughts. So I owned and operated a small business from 1989 to 2013, 24 years, right? And that was after I went to RIT for accounting. I passed the CPA when I was 21. I worked for one of the big 8 accounting firms for like 4 busy seasons, 4 years, worked at Xerox for 2 or 3 years. So I was like a CPA, accountant, auditor, analyst in my 20s, right? But then I'm like, I really wanted to be my own boss. So I had this small business for 24 years. And this was always a really interesting time of the year for me because you're wrapping up one year, the last couple of weeks of the year, but you're also really, really trying to get ready for the next year. You're starting the next year. So it was a tricky time of the year. Plus there's holidays and everything. But of course, if you're a small business owner, you're working pretty much all the time, right? So first few days of the new year, I always tried to get my trial balance, my balance sheet, my income statement to the tax accountant first. I tried to have it in by like the 3rd or 4th or 5th. My CPA at the time, my tax accountant, he was like, well, you did it again, Tim. You were the first one in, or whoops, somebody beat you in this year. But I just felt that if Xerox could close their year-end books within about 5 business days, I felt I could too. So I wanted to get that into the tax accountant. The tax accountant really appreciated that, even though in many cases they didn't get their software till like towards the end of January. So they couldn't really start processing returns, but they still appreciate receiving the info. So that's one hint I would say, is try to get the info in early. Don't let it overwhelm your January and February. Another quick story, I used to talk to end of the year, I used to buy like promotional products, sweatshirts, golf shirts, pens, etc., from Jim Capilupo, if anyone knows Jim. And we always got a kick out of, I don't know if anybody else will appreciate this story. Whenever I talk to Jim, we'd always talk about, Tim, how's that climb going up the mountain this year? How's, are you getting towards the top? Are you having trouble? Is it clear skies or is it cloudy right now? And, we'd talk about that. And then at the end of the year, wow, we'd always find a way to make it to the top of the mountain, right? You'd have a party, right? You could celebrate. You made it to the top of the mountain again, running your small business. But do you know what the reward is for making it to the top of the mountain? Okay, the helicopter would come, they'd take you down to the bottom and say, you get to climb the mountain again. So I always got a kick out of that, but Jim and I talked about that for years. So for me, starting the year off right it meant to me getting the bookkeeping, accounting, taxes done so you could focus on customers, and marketing, because that's what it really comes down to, is getting customers. But for me, I wanted to get the bookkeeping, accounting, taxes done early. I'll be curious to hear Jessica and Linda's thoughts on that. Today's speakers are focusing more on like the year-end accounting, bookkeeping, taxes. I'd like to introduce Linda Weiner, CPA, Jessica Drockler, CPA. They both work with Allied Financial Partners, who has several offices in this area. And what do you think, Linda and Jessica? Are you guys getting ready to climb this 2022 mountain?
Yeah, oh yeah, for sure.
Okay.
Okay. I'm Linda Weiner.
I'm Jessica Drockler.
We're with Allied Financial Partners. Just a little background. We provide tax and accounting services for a lot of small businesses and individuals. We have a payroll company. We also do financial advising. We do some consulting. And we're getting ready to ramp up here for the new year. We have our software in place. Unfortunately, the IRS hasn't announced when they're going to open up the filing date. Last year it was kind of mid-February. So we don't know where that's going to be, but we're encouraging everybody to get their data in as soon as they can, because we can prepare returns. We just can't. We can't submit them until they open. And sometimes we'll hold two. Last year, you might recall that we all thought that unemployment tax was taxable, and we prepared some returns, and as soon as they opened, we filed. And then we found out that unemployment tax, the first 10,000 for the IRS, was not taxable. Software had to get updated. We were on hold again. And then unfortunately, we had people who had already paid their taxes, and I had someone that paid early. They owed $4,000 because of it, and they got their money back 2 weeks ago. So we may hold a little if there's any hint that there's going to be some major changes in the tax code again this year. But your accountants may do it differently, or if you're filing your own, make sure you know that you know what the rules are this year. Anyway, we're going to get into talking about starting the year off right. We were here late last year, and we talked about ending the new year. So you may hear some things that we talked about at that point in time. We're only reiterating because they are so important and they're timely. So if you have questions, don't hesitate to ask, and you'll find our contact information at the end of the last slide. Okay, so we're going to talk first about 1099s. Jessica's going to give you some updates on that.
Yeah, so when we did our presentation, I believe it was in November, we already talked about 1099s, but we thought that there were so many questions that they're so important that we were going to cover it again. So for 1099s, they're due January 31st. They're for vendors that you have that you paid over $600 for the whole year. That includes things like attorneys, usually like small repair and maintenance people, and like rent and things like that. And the biggest thing is, go to the next slide.
Yep.
What you should be doing is sending out these W-9s for any vendors to get their information. This way, they'll fill out that top portion. And the important part here is that LLC. So we had a lot of questions last time about if they're an LLC, do they need to do 1099s? Well, it depends on if they're like a single member or if they're an actual, if they're incorporated. Because they could be either if they're considered an LLC. So if you're unsure, the best thing to do is just to send out these W-9s for the vendors to fill out and get back to you, and then you can decide from there whether or not they need one.
I'm going to add to this that there's certain vendors, big companies like Rochester Gas and Electric. You don't need to send one to them. But as Jessica says, send it out. I actually recommend that you send it out and you let that vendor know that you're not going to be able to pay them until they get this back to you. And if they won't get this to you, there may be a reason. And you might say, well, why won't they give me that information? Well, it might be that it is going to be on their own individual social security number, and they don't want to report the income. So if they give you this, you're going to have this information and you're going to send this into the IRS, and the IRS, when they look at their return, is going to do a match. And if it doesn't match, then they could get audited. What happens if you don't issue these W-9s, if you don't ask for them? Well, let's go back to if you did and they refused to fill it out, take a copy of what you did or make documentation to say that you requested it and they refused, and have proof that they refused. Because if the IRS comes back at you and tries to hit you with a fee for not issuing it, you can prove that the person would not fill it out, and it's on them. The second thing is if they won't fill it out, then I have to question whether you want to do business with them. You make that decision. If they do fill it out, remember that you're going to have somebody's tax ID number, especially if it's a social security number, and your file somewhere. So be very careful as to how you protect that information. You can get these forms at the IRS website. Just go to www.irs.gov and look up W-9 and you'll find the forms.
Okay, we have a couple questions.
Okay.
Do I understand correctly that if I hire a lawyer or pay for an office space, then I have to issue a 1099, even though I've been issued a bill?
Yes.
Yes.
Yes, you do.
And I also have, what if the vendors are abroad? Is there another form to a W-9?
What'd you say, the vendors? Oh, we don't issue to foreign vendors, but if they have a business in the United States, then we have to issue it to them, because they're not going to have a tax ID number that the IRS is going to look at. So if they're a foreign company, no.
Okay, that was it.
Okay, just one more thing on the 1099s. You can prepare these yourself. You need to go to the IRS site and order forms, and you will be filling out a 1099 NEC for most people. There's also a 1099 MISC, miscellaneous. You can download the instructions and figure out which one needs which. The other thing is there's a 1096, that's your summary. That means you need to file with the IRS along with the 1099s. We provide the service for our clients. Most accountants do, some payroll companies do. So make sure that you are prepared to do this, okay? Next thing we're going to get into is cleaning up your books. We talked about this back in November. Jess and I work on this a lot with our clients. So if you want to run down, this is typically what we do, Jess.
Oh, sure. So, I mean, we try to get our clients to do it monthly throughout the entire year, where they're reconciling their bank accounts and credit cards, and usually their loans as well, to make sure that they match the ending statements at the end of the year. But we look for things like when we're reconciling cash, usually in December, we'll look for things that haven't cleared throughout the year, to see if we should be like writing those things off, or like if it didn't get matched correctly, if you're using something like QuickBooks when you're reconciling, just to make sure that your cash count is correct. So if you let those things, add up too much, you might have a couple $1,000s worth of checks that were already cashed, but not done correctly in the software. So then it looks like you have less cash than you actually do. So that's one of the biggest things that we look for at the end of the year, is to make sure that, anything outstanding should actually be outstanding and that cash makes sense.
And in regard to that, just make sure that you're reconciling those maybe credit card accounts, because if you're assuming that the banks and credit card companies don't make mistakes, you're in for a big surprise, because they do. And you need to make sure that they're correct. We run through the balance sheet, the profit and loss statement, basically looking at two things. We look at all the accounts on a broad view, but we also sometimes do a compare to the prior year. So if we see something that's dramatically different from the year before, and given COVID, we're going to see some of that, but stuff that doesn't make sense. So if your payroll was way up this year, but way down last year, that might make sense because you may be ramping back up. But if there's expenses that just don't seem to make sense, we may come back and take a closer look at that to make sure, one, that you posted it correctly, or you didn't duplicate stuff. Why are we concerned with this? We're concerned because if you ever did get audited by the IRS, they're going to be looking at this information. What are they looking for? Did you underreport income and overreport expenses? So we want to make sure that our clients aren't going to be questioned on audit about something that we can't answer. And we want to make sure the books are right. So as Jessica said, if you have outstanding checks that are old and you've entered them twice, now you've double counted those expenses somewhere. That's why we have to clean this up. If you're an S, a C, or a partnership, we do have to report your balance sheet on the tax return. So it needs to be right. If you're a sole proprietor, then we report it on your personal return. The balance sheet doesn't get reported, but it does affect the income statement. So it's important. We also provide business organizers for our clients. If any of you are using an accountant to do your tax, they may send you an organizer where you fill out all the information, or you at least use it as a checklist to make sure you have your W-2s and your 1099s. We do this for businesses. Some businesses we just work with regularly and we don't need to do it, but if you would like your accountant to provide you with one, they should be able to do that. Ask for it if they're not doing it.
Well, real quick, so another good reason for you to be reconciling and comparing your balance sheet and your profit and loss statements is that if you can find these discrepancies and fix them before you get them to your accountant, it'll save you a lot in fees. Because if we have to go through, if a client gives us a QuickBooks file and like all their cash accounts are negative, and like their cost of goods sold is doubled compared to last year when it shouldn't have been, because of COVID, like we'll spend time looking into those things to make sure that we're doing it correctly. So the more time that you spend doing these things throughout the year, and I have clients who call me throughout the year with any questions that they have, because they look at these things monthly and they'll notice if something's different. And if they can't figure out what it is, they'll give us a call and send us a copy. Because that takes 15 minutes to do it in the month that it happens rather than trying to do it all year. So the more that you pay attention to these things, the less it will cost you in fees for your accountants to be looking into stuff like this.
And if you're using QuickBooks Online, it's real easy for us to go in there. You give your accountant permission to go in and help you clean a few things up. I have somebody who every once in a while says, I can't seem to get the payroll posted right. We provide their payroll. I download the payroll report. I go in there and I find out that they double counted one thing and they couldn't see it. I see it because I see it all the time. So I know where to look. And as Jessica said, the amount of time we could spend at year end cleaning up stuff that goes back to the beginning of the year could take longer than if we could do it right when it happens, and will be less expensive for preparation of returns. I see are there any questions at this point?
We have one. Is there somewhere I can go to learn what a balance sheet is and a profit loss statement, as in someone who could walk them through it, not just Googling it?
We're going to show you what they look like in a few minutes here, okay? And if that doesn't work, then we can talk with that person offline. Okay, This is big. If you hand us your books and you gave us all of the entries for 20, we made entries in 2020. So when we get your books, as Jessica said, we're going to reconcile things. So we make what's called a journal entry in your books, or we make note of changes. What we do is we give you those changes. There's 3 ways we might do that. We might just give it to you and you make the changes. If you're QuickBooks Online, we may just go in and just make the changes. Or if you want us to, and you're not QuickBooks Online, I have some bigger customers and I go to their site and make the changes. And once we do, then we know that the 2020 data is correct. And that's very important because your data on the balance sheet rolls to the next year. Your cash rolls, your liabilities roll, your receivables roll, your equity in the business rolls. And if it's not right in the prior year, it's not going to be right this year. And then when we go to prep your return, we're trying to roll what we call equity, and we're trying to figure out why it doesn't roll and finding what changes you made in your books for 2020 that we didn't make. That's another problem. Once the year is closed, if you're using accounting software, lock it down and talk to your accountant about how to do that. At least then you won't be able to post 2021 stuff, 2022 stuff in 2021 by mistake. And it's very easy to do that right now. If you're posting in QuickBooks your payroll you're getting paid this end of the week and you accidentally put 21 because you've been putting 21 in forever and you don't catch it, we're going to catch it. And it's important that you don't do that or go back to the prior year, because then we're going to have a mess to clean up. So setting a closing password, if you're using QuickBooks, is really easy. If you're using other software, you should be able to do that. But do not change the prior year. You've already reported to the IRS. We aren't going to go back and re-report that. Business plans. We strongly feel that you need to, as you're starting out this year, develop a plan for your business. Okay. And the things that we really believe you need to do is come up with a plan, which I'm sure the SBA offers help with this, but doing things like, how are you going to manage the finances going into this new year? Estimate what your income and expenses are. If you had a business last year, then you probably, and the year before, you can see some trending maybe. With COVID, that might be difficult, but maybe you do have an idea of what your income and expenses are. Also, how much time are you going to invest in this business? One of the things that people say to me, well, I'm going to start this business. And I say, well, how many hours are you going to work? Well, I'm going to have a pizza place and I'm going to be there all the time. And then I say, well, how much time are you going to spend doing your books? And they look at me and say, what books? But you have to make sure you have enough time to invest in your business. We also recommend that you have at least 6 months of expenses available at any given time, because let's say that your customers don't pay you right away. If you're that pizza place, you're probably getting paid. But if you're a bakery that's delivering goods to another entity, they might not pay you for 30, 60, or 90 days. And sometimes even more. And so you need to make sure you're going to have the expenses available for doing that, or the money available for paying for that. The other thing is that you want to know what funding sources you have. Some people say to me, well, I'm going to use my own money. And I say, okay, how much do you have? And they don't have 6 months of money available. So you look at other options. Can you get a line of credit? Do you have other resources? How are you going to pay the bills if you don't have enough cash? And how are you going to manage your financial data? And I know we hit the ground running talking about QuickBooks, but there are a lot of different ways that you can manage your financial data. And to start out, somebody might use a spreadsheet. Somebody might use QuickBooks. Somebody might have something else that they're going to do, but make sure that you're tracking that data regularly. And I have small businesses that usually the owner will spend like Saturday morning, that's their time to analyze their the money that came in and money that went out all week and determine where they're at. And I've seen plenty of people do this using spreadsheets to start out. But make sure you've got time to do that. And if you are going to use other software and you need help, then if you have an account, they should be able to help you. Or talk with the SBA and they can link you with someone who could help, or give us a call. The next thing we say is make sure you set your goals, review your goals regularly, and evaluate your goals. So if you're starting this business, you say in 6 months, I'm going to be able to hire 2 people. My business is going to grow to this amount. Did it happen? And if it didn't, then, let's say you're drawing a certain amount from the company based on what you believe you can do. Well, maybe you can't draw that amount because you didn't get there. Or maybe you did get there and maybe you still don't want to take too much money out because now you keep rolling that 6 months forward. And make sure you develop a budget for the full 12 months, but keep it rolling. And what I mean by that is if you think that payroll is going to be $5,000 a month, but all of a sudden it changes to $7,000, then you better change your budget and redo that budget for the next 12 months forward, because you're in a place where you don't have any other way to make up for any shortages in revenue. And you also need to carefully manage those expenses and watch what those vendors are doing to make sure that they're not overbilling, make sure that you're tracking invoices paid so they don't try to bill you again.
Yeah, I actually have a client, it's a husband and wife who run the business together. And occasionally, I'll find that, the wife paid the bill, then mark it as paid, and then the husband also pays it. So, we're going through their monthly statements and I'm like, I'm trying to check for these double invoices. And I'm like, was this paid twice? And then it's like a whole process for them to kind of go and find out. Eventually they find out that they both paid it. Now they have credit on their account. But we go through a monthly, so they know, if those things happen, things like that can happen, and it's important to keep track of it all and make sure that you can match your invoices to the payments that you've made. And if you have a budget set up and that a certain vendor, it always costs you between $2,000 and $3,000 a month, and all of a sudden you're looking at 1 month and it's like $6,000. Well, that's something that you should be looking into. Make sure that you weren't paying anything twice, or they didn't overcharge you, or something like that, because mistakes can happen on both sides, between you paying it twice or a vendor billing you the wrong items. So
I have something I'm working on with the client right now because I look at their books and they received an invoice for something from June, and it's a small amount of money, but I could see that it was paid in the books, and they pay their bills online. So they go out to the bank sends a check. So when you do that, the bank takes the money from your account for that check, and some banks do, some don't. So that cleared the bank statement in the month that we told the bank to send the money. Did the bank send the money to the right place? Did the people receive the money? Did the bank even send the money? They took it out of our account. The person's now saying that they didn't get paid. So now the process is to contact the bank. This happened in June. We're in January. The bank has to try to figure out if that check ever got cashed, and it might take a month or more. And before I can tell them, go ahead and pay that bill. If they never got it, the bank's going to give you back your money. So watch out for that. The other thing I found is I work with a business that gets a lot of cash because they're a venue and they have a bar, and I'll see them counting their money, the next day, and they ran it through the ATM and it got stuck. And it took a month for the bank to resolve the issues. And how could they prove how much real cash they had? So they're taking that cash into the bank, already counted and sorted. And then they're seeing what the bank comes back with. And while they're standing there, they can at least, if they don't agree with the bank, begin counting the money manually. So be careful with those types of things. ATMs, stuff can get stuck, your checks, your cash, and at the bank, you're probably safer going in and dealing with that.
yeah, and a couple times this year I had a few clients where they sent out checks, and with the mail, being so backed up for whatever reason, people weren't getting the checks, or they were getting them like 2 months later. So you kind of have to balance whether or not you want to avoid that check. 'Cause, that can have fees, depending on your bank, and, reissuing them another one and making sure that those expenses aren't being doubled and that you're reporting it properly. So it's important to really pay attention to your invoices and money going out and coming in.
I see there's another question in the chat. Melissa, is that anything we need to respond to?
Any suggestions for a seasonal business with respect to budgeting things such as payroll? Winter expenses are far less than warm weather months.
I think you just got to know what you have to pay every month. So if you're paying rent, then that's going to come every month, regardless of when your income comes. And you're going to have to match those income and expenses that come during the time in the season where you incur those. Typically, if you've got a seasonal business, if you're offering a product, then you're making that product well before that season. So you've got costs you're outlaying, and you're not selling them maybe for 3 months later. And you're not going to see any money coming in, or 6 months or more. So your challenge is going to be a little bit more difficult than somebody who might be running a business that does regular stuff every month. But even a restaurant or a pizza place, a bakery, you're going to have problems. You're going to have seasonal activity. You're going to have times where there's peaks. You're going to have times when you need to bring on more staff and let more staff and have less. We're even a seasonal business, and we see it also. We see our expenses go up really high during this time, and then they slow down during later in the year. I hope that helps. Okay. Part of your planning you should be doing if, and maybe you're working with somebody at the SBA with this or an attorney, but you need to decide the type of entity that you want to be. I highly recommend that most people just starting out just do sole proprietorship. Make sure you get a tax ID number, so that you're not giving out your social security number, and figure out what you're doing. You can form an LLC, but forming an LLC means that you do need to report a few things differently than somebody who's just a plain DBA. And that might be okay too. It does provide some protection, and you need to talk to I really like people to get linked up with an attorney if they're going to do some of this stuff to understand the legal implications of what you're doing. You could be an S Corp, a partnership. Most people don't form C Corps, though, and we don't work with as many C Corps as we do S Corps and partnerships and LLCs. You might do business as yourself, or you might have a corporate name. That's going to be your choice. But again, make sure you get a tax ID number, and that's very easy to do by going out to the IRS site and getting a tax ID number. And I'm sure that either somebody at the SBA can help you, or we might be able to help, or if you have an attorney, work with them. Highly recommend you have separate bank accounts and credit cards for your business. Even if the bank won't give you a credit card for the business, get a credit card for yourself that you only use for the business, because you don't want personal charges to show up and then try to sort that out. If you had an IRS audit and they want to look at those credit card statements and they see that you've got stuff from different restaurants or clothing stores, hobby stores, and that's not what your business is, it's going to question what else you're mixing up with personal and business. So keep it clean. Have a bank account for the business. Most banks will let you open a separate account. Even if it's in your name, only use it for the business. If you make a mistake and use the business for one of your personal things, immediately pay the business back. Make that clean.
This is one of the items that we spend, well, depending on the client. Some clients have a lot of personal credit cards and things like that that they use, that they also keep in their QuickBooks. We spend a lot of time going through them to make sure that we have them separated correctly before we take any of those expenses on the tax return. So it's just another one of those things that also just increases the amount of money you're paying your accountant to go through and fix things like this.
We also, if you need to take credit card processing, do your homework, okay? Make sure that you're getting the right system for you. Make sure that you're getting it from a place where you're going to be PCI compliant. I'm not going to get into that. You can look that up. You could be totally responsible for any if a credit card got stolen and the last place it was used was with you, even if it wasn't you that caused the problem, you could be responsible for everything that gets charged from the moment that they used it at your place forward, if you're not using the right systems and have it in the right place. And I'm in the process of working with a very small entity right now. And we made a decision to go with Square because they provide the PCI compliance. There's other credit card options. You can also use services through your phone. Just remember that if it's not an entity that's stuff is being securely sent, then that credit card can be read by anybody who can get into the transmission or into your phone. So be careful with that. If you don't have to take credit cards right away, don't do it. Get your business going. Start doing it when you're ready for that. We talked a little bit about manual bookkeeping versus software. So that's where I mentioned there are some people that might use spreadsheets and there's other people that use software. But always work with your professional resources. We work together with the accountant. We work with your payroll company. We work with your legal advisor. We work with your insurance company. I just sent one of my clients who we have to look through their books. I just sent their insurance agent a request to give me an outline of all of their insurance they paid this year because they have 3 companies and personal, and I want to make sure stuff gets in the right place. I copied them in. They know I did it. It's going to come back to me. I don't have to wait for them to ask for it. They've given me permission to work in that. And some of our businesses, we have accountant access to the banking so that if we're actually doing the bookkeeping, we can pay their bills. But if not, we have a connection with their banker. We can talk to them. So all of this stuff is done with sign off on you, but it does help if your professional resources talk to each other. I see a few more questions up there. So before we move the slide.
Okay, first, and I don't know if you could answer this, any good business attorney recommendations? And if you can't answer, maybe what would you recommend to look for in a business attorney?
What we work with a bunch of small attorneys, so if that person would email us, or maybe you guys have some that you work with, we can give you some names of people to work with, depending on where they are. You know, if they're in Wayne County, then I can recommend somebody there that I have a lot of little businesses working with. Here in Rochester, there's some. In other counties, we can make a recommendation. I'm sure you guys can too. So just email us. You'll see the emails at the end. Okay.
For year 2020, I received an inaccurate 1099, which inflated my income by about $6,000. I had received this as a payment auto-deposited in my bank account and repaid it. Was I correct to report this as income, then deduct the repayment as a business expense? When they finally correct/amend the 1099 due, I have to file an amended tax return. I have been working on getting it amended for 12 months now. It's still not resolved.
This is a problem. I think keep good documentation that it's incorrect, including your request for them to fix it. If they won't fix it, I mean, it might not come back at you, but it could if the IRS does a matching. And the IRS is so far behind right now. They have 7 million returns that still need to be processed for 2021 and maybe even some of 19. But it doesn't mean that 3 years from now they don't come back and they want something. So try hard to get that amended 1099. I think you're not going to have a lot of luck. That's my guess. If you took it as an expense, then your books are correct to some extent. You can justify what you did, and that's probably what you would need to do if the IRS came back at you. If you're using an accountant, then make them give it to them too, is make them aware of what's going on, and they may have some recommendations.
And that is it. There was a third question, but you had already answered it in the presentation.
Okay. All right, so here's a little more about software versus manual tracking. And I'm not going to get a lot into this. If people have questions about which is better, I can use a few examples. I have a client who he does training for people who want to run these marathons or these different types of things where they ride the bikes and they swim and that type of stuff. He keeps all this stuff on a spreadsheet every month. He comes in probably about the early March. He has all of his receipts, everything he collected, his bank register, everything attached to the spreadsheet. And the spreadsheet is in Excel, but he gives me a hard copy. And what we do is we have to do some tallies because the spreadsheet doesn't total up. Like he might have bought a brand new exercise piece of equipment and he put it in expense and it should be a fixed asset. Not a big deal. That happens to us even in the software. I'll explain that in a minute, or Jessica will. So it's not bad using a spreadsheet for a small business to get started. I had somebody else who had a notebook, and every day they were a little bakery. Every day they wrote on one side of the page what they paid out, like even the guy who came to change the carpets in the entranceway. And on the other side, they wrote all the money they collected. They were small enough that worked, but we had to total every day, and I finally got her to do a monthly total, and then we got her to do an annual total. So it's, again, we're cautious. We're always looking for ways to save the client some money. And the more work that you guys do, the less we do, the less it's going to cost you for our time. Jessica and I both work with QuickBooks a lot. Want to offer a few comments though? Or?
Yeah. So kind of what she briefly mentioned was, we look in your expenses for anything that should actually be on the balance sheet, something that should be depreciated. Usually that's, equipment, any big leasehold improvements. We typically look for anything over $2,500, just to make sure they're not being expensed improperly. But we also look at the accounts receivable and accounts payable to make sure they make sense. I usually spend a good amount of time in these with some clients who are on top of everything every month. They'll have doubled invoices that show like from 2018 even. I can't get them to go in and fix it. But I always have to go in and adjust their accounts payable for that, because I know the $6,000 bill that's sitting on their books should not be there. But they never fix it. But they're able to run all these reports. They can look at their month, their quarter, and their annual reports. They see if it makes sense. Probably the easiest way. We talked about this a few slides ago. Making sure everything makes sense compared to the prior year or even the prior month. Just keep track of everything.
And the most important thing is make sure you have support documentation. Now, I see a lot of people moving from paper to saving things on their computer, or they get emails, and emails are fine, but I think you got to find a way to save that documentation. If you get an IRS audit or a New York State audit, the example I can give you is one I did for a farm market and a farm, and the guy walked in with a box, and every folder was in the box was for a different vendor or for a different type of income. And when the IRS requested the stuff from wanted to see a certain expense line, I could pull those folders and give them to the IRS auditor. I didn't give them any more than they asked for. We don't answer questions that they don't ask, and if we don't know an answer, we say we don't know. I'm going to just tap on that topic. I'm going to comment on that for a minute. If you do get an IRS audit, I suggest you get an accountant to work with you. And I don't mean just a question, but an audit, because you can tell you should know everything about your business. If you give it to an accountant, they won't know everything. And sometimes there's negotiations that go on with the IRS. So just be cautious of that. But if you're keeping it online, then find a way to file and store, or if you're keeping paper that we say 7 years, but if the IRS suspects that there's fraud, it's indefinite. So I don't know what to tell you about that or how to store your stuff for that. Make sure that your documentation is accurate. Okay, I'm going to go to the next slide. We want to look for questions.
We have one question. Are there any good and more affordable alternatives to QuickBooks for small businesses starting out on the journey of keeping better books?
I would say the one I usually recommend is the basic QuickBooks Online. I'm not sure what the price is at anymore. I feel like that's usually what I recommend.
Yeah, I think it might. I don't know what the price is. There's two ways to get that. If you're a nonprofit, then go to TechSoup and definitely go there. That's $75 for a nonprofit with a proof that you're a nonprofit a year. If you're not, and you go to QuickBooks Online, it might be anywhere from $325 is kind of hitting for the basic, but I think it might be more like $500, and it's an annual fee. And QuickBooks is beginning to charge an annual fee for desktop. Your accountant might also be able to provide you with pricing, and we do that for our clients. And I think there is a bit of a discount, but QuickBooks is what's used by people, especially in this area. If you start going to other types of software, there are a few that are similar to QuickBooks. I'm not sure how many people are familiar with them. So if you're working with an accountant who doesn't know anything about them, then you're going to have some issues there. You may have a hard time getting help with it. And some software, if you're really big, QuickBooks would be not the right software for you, but it would be very expensive. So again, we could talk offline if you're looking for a recommendation based on your specific business. Okay.
Okay, another question just popped in. I use QuickBooks Desktop for Mac. The accountant I use has no familiarity with the Mac version, and it is at times a struggle for us to communicate back and forth as they cannot advise me on merging information that they send back to me. Would you say that for the most part, the accounting world uses the Windows version? By the way, we started with the online version, and that was a nightmare.
Yeah. We don't use Mac often. All of our software doesn't work well with it. We find it easier in Windows. We actually had a client we had kind of the same issue trying to get it to work properly. So we ended up just having them bring their laptop in for us to go over everything on their computer, on their Mac, because it doesn't transfer over well.
Okay. All right, we talked a bit about these things. The AR and the AP report, Jessica went through the importance of making sure that there's that you don't have anything showing up in your payables or your receivables that you've already received or paid. And QuickBooks is kind of funky with that. If you don't apply a payment, it's going to really not look right. And that's one of the first places I go when I get a client set of books. I look at their AR and their AP, and I match things. Like if it might only be pay a bill, like if it's an AP and you got a credit, I say pay bill, and all of a sudden a credit pops up. And you apply the credit and it's done and it goes away, and now your total AP is a little bit, it's the same number, but it doesn't show this credit way out there 3 months ago. So those are some things that we do. And usually I don't just do that myself. I do it. I try to show the client and have them do it so that they can do it in the future. And manage your business based on the data, not on your bank accounts. Too many people say, oh, wow, I got this PPP money and now I can do this and this and this. Or I got a grant from the city, or I got a loan from the bank. you still have to run your business the way you were going to run it. Don't do anything different. You know, unless you win the lottery and get millions of dollars, then you can do whatever you want. But if you've got a business plan, stick with it. And don't say, well, oh, I can give myself a little extra money, unless you figure out you really can give yourself a little extra money from the business. Okay. All right, we talked about software. We're not going to get into much of that. Melissa, you might have another question.
Yep. Doesn't the AP and AR accounting depend on cash or accrual basis? What is the criteria for using one over the other?
Cash or accruals? Yeah. I would say most people use cash. If you choose to use accrual, it's going to be very difficult. Most of my businesses use cash, but I do have a event venue and they use accrual. And the reason they would do that, this might help you understand, they're collecting money 2 years in advance of the event. And that money might come in every quarter. So they're keeping that money in what's called unearned income. And they do not report that income right now because they might have to pay it back. So what happens is when the event happens, we move all that money over to the books and it gets reported then. So if they're doing a wedding and it's $20,000, and over the last year, they've been collecting that money in 2020, but the wedding's in 2022. They've been collecting in 2020 and 2021. It's just sitting in unearned income. And then when we have the event, that whole $20,000 is coming over as income. I would say the only reason why you'd have to do that is if your business runs, if you're that type of business. So let's say you're developing software for somebody, it's going to take 12 months and they're paying you along the way. Then rather than take the cash all now, you might want to wait, because what happens if you have to give that money back? You've already claimed the income. You could claim an expense later, I guess. Most people though just use cash, but they still track their accounts receivable and their accounts payable. And you can do that. And in QuickBooks, you have a choice of looking at stuff on a cash basis or an accrual basis. And normally QuickBooks will come up on accrual. You just have to click the button at the top to be on a cash basis. Okay. There we are. Jessica could have told me the next slide. Yeah, so cash, you account for the transactions when the cash changes hands, and on accrual, you account when it's earned or when expenses are incurred. Cash is easier. Most small businesses use it.
Okay, we have another question. How do we account for, categorize a business loan like EIDL and the expenses paid from the loan, especially on Schedule C? I understand the loan is an income, therefore not taxable. When paying biz expenses out of the loan, are they deductible from the income? What if we end up paying more in expenses than income received? How will all of that affect taxes owed?
If the EIDL is forgiven, then the income is not taxable. The expenses can be deducted, I believe.
Yeah, if expenses are deducted, just like if even if you just use your own cash, the same method for Schedule C, they're considered an expense.
So the income isn't going to be reported from the EIDL on Schedule C, but we don't know what the tax software is going to look like. It might ask us to report what the EIDL income is, but not include it as income on the Schedule C. We don't know that yet. We just were told that our software is available to start entering data last night. So we haven't looked at it. I don't know what the forms are looking like. But again, you won't report that income as income, but your expenses are expenses. Just make sure you didn't double dip. PPP, EIDL, structured venues, shuttered venues, city grants. There's a whole bunch different things that people got this year and last year, or last year and the year before, and some of them say that you can't use the same expenses for the same, grant. So just make sure, I have people tracking that in spreadsheets and deciding what they're going to use for which grant when they're asking for forgiveness. So if you've already done that, then anything above and beyond that it's still expenses incurred, just like you would report it, just like you're reporting all the expenses. Okay. All right. Talk about our budget.
Well, we already went through some of the budget in here. But here's a good slide on it. So you should be creating these annually and, updating as needed. I know Linda mentioned earlier, or this is actually a good one for maybe even, seasonal. If you know that your payroll is going to increase from 5,000 to 7,000, to make sure you get that put into your budget to see what your bottom line is going to look like. Track it, make sure it makes sense, view it and update it as needed. And try to make it realistic. When you estimate your revenue and your expenses, try to do it as best as you can using historical data. And for seasonal, account for slow periods. That's the best way to do it. So.
Income we've talked a bit about. Jessica talked about making sure that your income, you're looking for all of your income, your checks, and make sure the check and balance about that. Track your taxable sales and sales tax collected. Also, if you have something that you're reselling, you could get a reseller permit for that, depending on what it is, and then you would be able to not pay tax to that vendor, or if you do, you can take the credit when you file your tax return. Usually quarterly, annually, monthly, you wouldn't take that credit. If you are, a word of caution, if you are going to charge sales tax, make sure you've already signed up for a sales tax ID and on the New York State sales tax website before you start collecting. If you haven't done that, and you would have to do it to pay the sales tax, but you really shouldn't be collecting sales tax till you have a sales tax vendor certificate. And they come really quick. You get them immediately. We talked about separate bank accounts for if you have enough in sales and employment, and those taxes get paid kind of, if you're not using a payroll company for your payroll, those taxes are going to be paid quarterly. Also, your sales tax might be paid quarterly. Many small businesses end up going out of business because they haven't put the money aside to pay those taxes. And then the time comes to pay the taxes and they can't pay the tax. So put that money in a separate account. If it's a small amount, I have a physical therapist that sells a few items, like a few weights and ice packs and stuff, and they file annually. They might owe a few $100s. They don't worry about whether they're going to have the cash to pay that. But if I have another venue, their sales tax bill is about $10,000 a month, and they need to make sure that they can pay that when it comes due at the end of the month. Make sure you close out those credit card terminals and cash daily, especially if you're trying to reconcile. I know the client that Jessica works with where she had a nightmare just trying to reconcile the card and the cash registers until they, more recently when we got a better routine out of them, and just reconcile everything. Talked about expenses. Items purchased for resale will usually go into your inventory. Items used in providing service or production is cost of goods sold. Then you have operations items, office expenses, things like that. You might have wages and items to be identified separately for tax purposes. This becomes important. Vehicle miles. There's apps you can use to track your business miles. You can keep a little notebook in your vehicle. One of our clients is a bakery. We highly recommend it. They either, for each truck, have an app, have a book in the truck, whatever they have to do, because we do have to report the miles. And you either get paid vehicle expenses or you get paid a certain amount per mile, which includes the expenses. Owner's life and health, there's a separate place on your personal tax return where that can be deducted. So we need, even if the business is paying for it, it's not going to be expense on the business. It's going to show separately on the individual's return. There's a few other items too. Jessica mentioned fixed assets. If you don't know if it's a fixed asset, you can easily ask your accountant, or again, a quick phone call to us or the SBA might be able to help and have documentation for this stuff. And real quick, track closely. We already talked a lot about reconciling that bank and watching what's in the bank account. Track that, okay? Your equipment and large items, loans. Too many times you get a loan and you post your whole payment to the loan. Well, a portion of that payment is interest expense. So when you try to, I get people that say, I paid off my loan. I go, well, let me see your loan statement. And then the loan statement says they still owe $5,000 on the loan because they took all the interest as part of their loan payments. And just keep tracking your own investment in the business. How much did you put in and how much came out? There are places in QuickBooks to do all of these things. Okay, we're going to get into a balance sheet, but before we do, are there questions?
Yes. A majority, jump down. A majority of our sales are non-taxable in excess of 95%. Is this something that could trigger an audit?
No. If you're paying your sales tax, no. You report all your sales and then you report your taxable sales.
Right, and he would.
Now, New York State might want to look at it, but you just have to have your documentation in place and it should be okay.
What does your investment in the business mean?
So you start your business and you put $10,000 into the business to get going, to buy equipment, to do stuff. You pay that personally. That's your investment in the business. As time goes on, you might pay yourself back. So that 10,000, you might say, I'm going to pay myself back 2,000 of that 10,000. Now I have 8,000 invested in this business. You might also keep putting money into the business every time you're short. You should keep track of that. I'd like to do that in a couple of different ways, but I work with each business as to how they want to keep track of it. Some people make the initial investment, don't plan to get that back until they sell or close the business. And then they might loan money to the business and keep track of that, but at no interest rate. So again, depending on the type of business, whether you're a sole proprietor, a partnership, an S Corp, that might, the way that's handled will affect how it's reported for taxes. And you need to make sure that if you are an S Corp or a partnership, that you're working with an accountant and they can help you with that.
One more. Can I use all mileage for a dog sitting business?
Cash mileage, or say that again?
Can I use all mileage for a dog sitting business? I'm assuming it means traveling from house to house.
Yeah, it's your travel related to the business. So you have a place of business. Let's say you're a restaurant. You cannot write off the mileage from going to your house to your restaurant every day. But when you're at the restaurant, you have to go and drop off something to a customer. You count that mileage back and forth. If you are at the restaurant and your house is the same place, okay, you live upstairs from the restaurant, then whenever you leave that place to go somewhere for work, you count those miles. So typically a regular person, I can't count my miles when I go back and forth to my office. But if I am going from my home to my first client is an hour away, but my office is 15 minutes away, I'll count the miles above my normal travel. If you are individual who works from your home, then your home is your business. You have no other place, and you count your mileage from that point. Okay? We good? Okay.
Yep, that was the last one.
All right. So we're going to talk about a balance sheet, but what? I have a balance sheet here. This might be easier.
Yeah.
So somebody asked, what's a balance sheet? A balance sheet gives you a picture at a point in time. If you ran a balance sheet today, it would tell you what are assets, liabilities, and owner's equity. There's a formula. Assets equals liabilities plus owner's equity. Assets are what you own, liabilities are what you owe, and your equity is what you have invested in the business, either money you put in or profits over a period of time that can accumulate and losses that will get deducted. These have to balance. 940 over here, 940 over here. Your assets include things like cash, your receivables, your inventory, your furniture and equipment, and any depreciation. I'm not going to get into depreciation right now because if you're buying equipment that needs to be depreciated, you need to be talking to somebody about how to do that. There are so many different rules, and they change all the time. Your liabilities are what you owe people. If the owner gave a loan to the business, it might be here. If you have a bank loan, it would be here. Any other type of loan, credit cards would be here. This business, the owner contributed some money. Right now they have a net profit of 230, so that's going here. If it was a loss, this would be a negative. And they have prior equity in the business of 210 or equity. If I go here, here's an income statement. See this 230 here? There's the 230 right there. The income statement shows me what income I have and what my loss is. And we usually run these on a yearly basis. At the end of the year, this net profit all comes over here. It does during the year too. And it gets zeroed out when we start again. So this business had income of 1,200 and they have cost of goods sold. They're making something. They have a net profit of income, net income, not net income, but a gross profit of 230. They have all these little expenses over here. This is just a small little business. And their expenses add up to 500, so they've got a profit on the bottom line. That's basically what a balance sheet and income statement look like. And here, and you have the slides, we talk about these things a little more. Nothing new from what I said. And then back to monthly processes we've talked about. Important here is block out time each month or week to work on the books. If you're a consultant and you see a few clients every week, you could probably do this on a monthly basis. If you're a restaurant, you're going to do it daily. If you're another kind of business, you might do it weekly. And I talked about record retention. Bank reconciliations we touched upon, avoid mass clearing all items and reporting the difference to reconciliation discrepancy. Jessica mentioned several situations that come up that you might have to look at, like old checks and stuff. You made a mistake, clean them up. If you've got a small penny discrepancy, a small amount, yeah, you might do that, but I see too many big reconciliation discrepancies. And then we get it at the end of the year and we got to figure out where that really goes. We talked about the outstanding items. And when the balance is done, if the balance sheet, it should agree to the balance sheet and with your bank reconciliation. If you're using software, it'll work. If you reconcile your banking at home, then you're familiar with this. And if you're not, I'd suggest you start doing that too. On a monthly basis, if you have QuickBooks or a software that can do it, you can run a balance sheet. After you finish your reconciliations, it'll tell you how much money do you have in the bank, how much are your assets, what's valuable here. If this was a big number, accounts receivable, you could go out and try to get some of that money paid. That's a good place to get cash. If you've got a lot of inventory, make a decision. Is this stuff that you're ever going to sell? And if it's not, or maybe write it, have a big sale and get rid of it, or find somebody who might buy it. Equipment, buy equipment you need. Don't buy equipment because you think you need it. And decide if rent versus buying, lease versus buying is better, or maybe using, you need a sander right now, just rent that sander maybe. You might not ever need it again, or borrow one. Okay, run your, there's other reports to run, and if you don't have the ability to run these in software, then you won't understand what we're talking about. In software, a general ledger report just lets you see everything that went in and out of the software. Make sure your items are posted properly. We talked about that. You run your profit and loss versus actual. In QuickBooks, you can have a budget versus actual, and look for anything that stands out. You want to make any comments here?
I don't know, just when you're looking at those monthly reports, especially when you're doing your budget, that's a good place to see if it makes sense, and how close you are. That'll help you decide whether or not you need to adjust your budget. Because maybe you weren't, expecting, with inflation, maybe you didn't expect expenses to go up as much as they did. So you had to adjust to make sure that you have enough cash to cover everything for your budget.
Okay, and we talked about stale AR and AP and a few other things. The same here, cash flow, tracking your cash. I've got a cash flow template right here. You can set this up, maybe, find one online. This one isn't interactive, but I put the beginning cash in, and if you're good with spreadsheets, you list here any income that you're expected for that period. This might be January 2022. I think I'm going to get income from Joe Sped, and I'm going to get income from XYZ company. And you put that here, and this green will total that. Now I think I have to pay out my payroll. Maybe you don't have payroll. Maybe it's just you, so you don't have any of that. My payroll taxes, any benefits to my employees, insurance, anything you can think of. These could be whatever it is that you're paying out for the month. And then any loan payments. This is a cash flow now. So any cash going out, if I have to pay that loan $200 a month or $2,000, including the interest, it's got to go here. Any money I'm going to take out, and any interest I might have to pay beyond maybe these loan payments. When I'm all done, it'll show a total for cash outflows. And then you subtract that from your inflows, and then you'll see what your cash balance is. If you have a line of credit, let's say it's negative, well, you might say, I'm going to go out of the line and I'm going to borrow. This is a -5. I'm going to borrow 10,000. Now you'll have 5,000 cash. That comes up here and starts the next month. And it keeps going. Don't assume that this line of credit doesn't go away. You've got to put this now in a loan payment up here. You've got to pay something on that line. Your bank might require monthly payments, or they might let you leave it. But if your line maxes at a certain amount and you run out of line, then you have no other place to get cash. So this is a good document to be able to look at your cash flow. And even if you're not using software, I highly recommend people put this together while they're doing their planning for a new business, or they're planning for the year. And I would go out 6 months.
Yeah, you can probably find a template online for Excel, or like maybe even Google Sheets might even have one that's already kind of set up for you as well. Quick Google search and probably find you something that you could at least begin with.
Any questions?
Yep, we have 2 questions. With respect to equipment depreciation, is there a significant difference in depreciation of new versus used equipment purchased? Any tips on making the decision of new versus used?
Depends on the equipment.
Yeah. And it also depends on what you need that year. Like, do you need more depreciation? Like, do you have like a huge profit, or do you have a loss or take less? It's a whole planning process for depreciation. It's kind of hard to recommend one or the other.
What I like to look at with equipment is how much is it? Is it going to be a depreciable asset? Can we write the whole thing off? And do we need to write the whole thing off this year, as Jessica mentioned? So if I have a big net income, I want to write off the whole thing if I can. But if I have a loss, I want to save it because I think I'm in my early years. Sometimes businesses don't see a profit the first anywhere from 1 to 5 years. So I want to save it and write it off over, it might be a 5-year asset, it might be a 15-year asset. And there are different rules depending on the type of asset.
Mhm.
We can try to answer a question more specifically if someone wants to email.
Okay. I work from home instead of renting an office space. Should I record anything as a cost or expense?
Be very careful with the use of home. If you were to charge yourself rent, then that becomes income on the personal side. And it will affect your property tax credit. Okay, and if you own a house, you'll know what that is. You may even lose it if you're renting a portion of your home out for business. But that being said, you can take, there's 2 ways to take this on your tax return. The easiest and simplest is if you're using a small space, you can get it's 500, right? Do you remember the number?
It's a simplified method.
It's a simplified method. It just gives you a certain amount based on 100 square feet. I think you usually use something like that.
Yeah, it depends on how big the space is. Use your square footage up to, I think, 2,500.
Yeah.
And you get a credit for that portion.
And just take that, don't do anything else. Because normally that's going to be more than you're going to get if you try to divide everything out. However, if I have somebody who has an S corp and his whole basement is his office, so we allocate a little bit of the cost that he's paying for utilities and a few things like that, and he pays them out of the business. So he'll pay 2 bills to the utility company, and then we apply that. Or he's got his own separate setup for his computer and his internet and Wi-Fi and everything for the business. So those are business expenses. So you have to be really careful. Again, if you just got a small business at home, the simplified method may work. If your business has a negative at the bottom, you're usually not going to get that business use of home that year, but it'll carry forward. So again, that's a planning tool that we use. You know, if it looks like your business isn't going to have, or it's going to have a big profit, then we'll work through that with you. If it looks like the amount that you're going to write off for the business is pretty close to the simplified method, I prefer the simplified method because I feel that the IRS has less to argue with you about if you use the simplified method. Anything else?
Nope, that was the last one.
Okay. Okay, reporting to the government. So we love sales tax. We have to do it monthly. And you have to obtain the authority, as I mentioned, with New York State to collect sales tax. And you have to report that sales tax. Usually when you sign up, they're going to set you up as a quarterly payer. Within a few, maybe by the second quarter that you filed sales tax, if it's a huge amount, they're going to change you to a monthly filer. They usually won't change you to a single or an annual filer. It might take a year before they do that. I tell people, and they give you a choice. If I feel that people may not be able to pay their quarterly tax, or they know their business is going to increase, I tell them don't go annual, just pay it quarterly so you don't run into problems. Monthly, that's different. You've got to pay that, and you got to pay it on time. If you don't, you're going to end up with penalties. So we file sales tax for clients. We have to sometimes beg clients to get us the data. Other times we do it for the client every month. They know we do it. We can trust them that their books are in good shape, and that's what we do. So you will have to file sales tax or obtain authority. Filing fees, one of Jessica's favorite, right?
No. You're paying.
If you're a partnership or an LLC, you have to file LLC filing fees annually in January. That usually happens. This is separate from the tax return. thinking it's $25 for an LLC unless they've changed it. We usually file them for our clients. The reason we do, if we're doing your tax return, we prefer that we file this because then we know it got filed and we're not recounting it somewhere else. If you're an S corp, then it gets filed with your tax return. 1099s we talked about extensively. They're due to the vendor by the end of January, and then they're due to the IRS, I think, by the middle of February. We file 1099s for our clients. So we file the IRS side of it, and we get a longer period to do that because we're filing electronically. If you're going to do your own, go to the IRS website today, look for 1099s, 1098, order yourself some 1099s, NEC, 1099 miscellaneous, and order a couple of 1098s. I ordered some for a client that wants to do their own early last week, and they haven't arrived yet. Usually they come pretty quick. So with the mail system, I don't even know if they'll have them in time. We have extra copies for our clients if they want to do them themselves. You can buy software. I think Staples sells it. It might cost you as much to buy the software and do it yourself as we would charge you to do it ourselves in-house. But make sure you get those filed. For every 1099 that you don't file, there's a penalty if you get caught, and it's up towards near $2,000. How can you get caught? You'll get caught if the person that provided the services gets audited and they haven't claimed income, and then they start looking at money in their personal account, and they see money came in from you, and then you didn't issue the 1099, now they're going to come back at you, okay? You could get audited, and then they find you didn't issue 1099s. Now, all those people you should have issued to, if they haven't claimed the income, they're going to get audited. So it goes either way. Biennial statements are for partnerships and corps, and you get something in the mail that tells you it's time to pay your biennial fee, and you can pay that. All of your fees for both federal and New York State can be paid online. I highly recommend you get yourself enrolled in that, even personal, and you pay it that way, because you have proof that the IRS or New York State received your money on that day. You mail a check, you don't know when it gets there. I have a tax return we mailed to somebody in March. The post office still can't find it. So we can't guarantee that you send a payment to the IRS or New York State and it gets there on time. And then your payroll quarterly and annual, if you're using a payroll service, make sure they're reputable. If you were around about 10 years ago or more, there was a Paybooks company in Palmyra that went out of business because they went bankrupt because they were holding on to all the tax that they collected from their clients, and they didn't file the tax, they didn't file and pay it, and they didn't have the money to pay it. I actually had a friend who ended up having to repay all that payroll tax that she had already paid to this firm because the government doesn't care. They didn't get their money. So make sure you're using a reputable company and that the money's getting paid. There's also a new, this PTEP thing. So if you have a partnership or an S corp, talk to an accountant about that. It's allowing you to take some of the tax that you would pay in the corporation and deduct it on the personal return. But I don't have a lot of information on it. It just came out, and you need to talk to somebody about that if you're an S corp or a partnership or a C corp. Non-deductible items for tax purposes. It has been 50% meals and entertainment. I think there was a COVID thing where they said there.
Yeah, so now with COVID, you can actually do 100% of meals if you got them from a restaurant. So try to keep track of who you paid out. So for examples that wouldn't count would be if you stop by like, I don't know, like a 7-Eleven and grabbed, you know, like a candy bar or something like that. Like that doesn't count. Or another good example for this area is Wegmans. You know, they sell food in there. They're not primarily a restaurant, so you can only still take 50% of that. But anything like, you know, DeBellas, things like that, you know, to keep track of and, you know, be 100%. I know a lot of clients already have them set up to if they had QuickBooks, it was pretty easy to, export to Excel and, divvy it out from there, but you might have to spend a little more time on that this year to make sure you're getting, all the deductions that you can.
And that we think is just for this year, but we don't know if it will revert back. Personal expenses or personal use of product and service, you can't deduct that. Contributions to your personal return. There is something now with farms and maybe bakeries where the product that they used to give away, there's some change in what they can deduct. So if you're a farm or a farm market or a bakery, then a restaurant, I think you want to check with your accountant. I haven't done a lot looking at this yet. I only have one client at a farm that it will affect, but we have a whole group that do farms, so we'll see how this is going to affect that. Loan principal is not deductible. You borrowed the money, you didn't get anything, any tax benefit for that, or pay any tax. You don't get to pay write off the payment of the principal, but you can take right off the interest. In vehicles, we either get mileage or we get repairs and maintenance and the cost of the vehicle, but it depends on your type of entity and who owns the vehicle. So if you're sole proprietor, the business probably isn't going to own the vehicle, but if you are a bakery, you might buy some trucks. Those trucks are used exclusively for the business. That's a different situation if you're doing deliveries and stuff. I have people that say, well, I use my car to go to different clients. Yeah, that's fine. Keep track of your miles. We can't write off the vehicle. If you're an S Corp or a partnership and you need a vehicle, you really should have the business buy the vehicle. You should not buy the vehicle and then use it. It gets tricky. And again, I would recommend you have an accountant who helps you with that. If you're a disregarded entity, and that's where you file a Schedule C on your tax return, your personal return, you don't file a partnership or an S Corp separate return. You really want to show a profit 3 of 5 years. Otherwise, the IRS could really, you'll get flagged for sure. If you're so close, and this is your 3rd year of a loss, and you've got a small loss this year, I say, make sure you show a profit. I don't care what you do, you don't take an expense, okay? But show a profit, because if you're seriously in business, this will come around. Now, if you are a farm market, a lot of times they're going to show losses for many, many years. They're going to make their profit when they sell their property. And the IRS will probably look at them. I've had one audit on one. But they don't come back right away. So some businesses are expected that they aren't going to make a profit, but you got your little business at home, you've got a consulting firm, you better not be thinking, oh, I can do this and then I have a loss and I can write it off. No, if you start to show losses, you might get a letter and say, we're disallowing this. And they'll go back. They'll go back to 3 years and take it all away. And you'll have to pay all that tax. Partnership and S Corp losses may be limited. That's why we told you if you have a partnership or an S Corp, you want to talk to an accountant because your loss may only be limited to the amount that you've invested in that business where I showed the equity. It's not quite that, but that might be an easy way for you to understand that. And again, tax reminders, make a note that you have to deal with these. Owner should be on payroll. I want to talk about that for 1 minute. If you're an S Corp, I had a couple people change from an LLC sole proprietor to an S Corp this year. And the one thing we did is I said to them, for the work that you do for the S Corp, what would you be paid if you were working for somebody else? And they told me. And I said, you're going on payroll and you're paying yourself that amount of money or more, nothing less. And they did. Now there's a profit on the bottom line of this S Corp. So we at least reported the payroll to be reasonable. The profit now is income to them, but it's not taxed for Social Security and Medicare. But you have to make sure as an S Corp owner that you are on the payroll. You can then also, as an S Corp, take advantage of higher deductions for retirement, if you have a retirement plan for the entity and some other benefits. If you're a partnership, you can't go on payroll. You are going to equally share the profits and losses, and that's going to be your income. Some people who have these situations might have to pay estimated taxes too. So make sure that you're calculating, or your accountant is, your tax for the next year, and you're meeting those requirements of 100 to 110% of the prior year's tax you're paying in the new year. Okay, more questions?
Okay, we have one question in the chat. How does it work to buy a vehicle as your small business getting credit for the loan? Can the business buy your own existing personal vehicle?
I wouldn't recommend that. Depending on if it's an S corp and the business is, you're using that vehicle only for the business, that's it. And you've got another vehicle you're using for personal use, then I would say all your expenses related to that vehicle can be written off, and we'll compare that to using the new, or to use the mileage rate. I think for 2020, it's 58.5 for 22 now.
Maybe.
Yeah,
It
I don't know if it's
changes.
for 21. But it's a tough one. Let's say you have a van type of vehicle and you convert it to an S corp from individual, and you're going to sell, you could sell that vehicle and register it in the business. Okay, but if you're going to drive it for personal, and if your personal use is going to be quite a bit higher, it's going to be more than the business use, then I would say you better keep it personal. That one gets tricky, and it depends on the situation.
Okay. Is there a good rule of thumb for when or why to change from LLC to S corp?
Yes. I got a great example. I have somebody this year who asked me that question. So I looked through their books, and they're not making much money on the bottom line. And the amount of reporting they have to do for the S corp is an extra return. So the cost to do the return and the tracking in a balance sheet. I said, you're not big enough. They're going to make a couple $100. I said, I think it's simpler to keep it on your personal return. And you're not limited by certain things. Like if she had a loss, she wouldn't be able to take that loss if she doesn't have an equal investment in the business. But on a Schedule C, she can do that. However, I have a couple of businesses that have net income, bottom line of 300 to 500,000 that were Schedule Cs, and they were putting away what they could in their retirement plan. But we convinced them that by going to the S corp, we could do more in their retirement plan, and also what I told you about them going on payroll and paying less tax. So for each of those, it saved them about $5,000 in personal tax. They are going to pay a little bit more for doing the S corp returns, but not much, because their businesses were so big that we were doing all the work we would normally do for an S corp or a partnership anyway. We had to. So I guess it depends on your particular business. It depends on where you are in the life of that business, and it depends on what it looks like.
Okay. Do we have any more questions?
Okay.
Do you have any closing statements?
Yeah, can I just say thank you very much, Linda and Jessica. Great job. Lots of very useful detail. Appreciate your help. Once again, if anybody would like to meet with us at the Small Business Development Center, our website is www.nysbdc.org. And there's a box in the upper right corner for making an appointment. So thanks again, Linda and Jessica. Have a great year, everybody, and happy 2022.
Thank you.
that concludes our first Wednesday of the year. Thank you, Linda and Jessica, for participating, and Tim. Have a happy rest of your day.
You too. Thank you.